The Indian luxury car market reported its best ever sales figure in 2023, and spearheading those numbers is Mercedes-Benz with its best ever half yearly sales figure. And we have the man of the hour, Mr. Santosh Iyer, with us. Thank you, sir, for joining us.
Thanks for joining us.
For having me here. And my first question to you is regarding the growth of the luxury market. Despite being the most taxed segment, the most taxed luxury segment, the luxury segment is growing at a very strong rate. What do you think are the macroeconomic features or the macroeconomic elements that are contributing to this growth for the Indian market?
I think it's high time that the growth comes in, because luxury is still 1% of the total market, and that has not changed compared to many other markets. So it's good. Of course, the taxation and others are there for the segment, but I think there is also a change in the economic structure and people propensity to spend on luxury goods. And that's what we see. So on one side, there is a strong economic activity in India. You can see that with the GDP growth, you can see that with the stock market movements, and therefore a lot of money and also debt-free balance sheets. Corporate India is also giving good results. This means a lot of money is coming into salaried class. It's also coming to a lot of startups and others, and they are all also wanting to indulge and spend on luxury goods, not only cars, I would say even watches and many other categories. So I think it's a very positive sign of development and consumerism, which is coming to participate, and also I would say consume luxury, which was not the case many years back. So that's a big trend that we see. Apart from this, also demographics. You can now see more women buyers also getting into the luxury segment. So that's also causing this growth to come in to this market. So I think the trends are positive, and hope this continues.
That was actually my second question, that what are these new demographics that are popping up? Is it because of this uptick that has happened after COVID, or is it the supply chain has constrained a bit, the restraints have picked up a bit, or is it because of this YOLO feature which people are talking about nowadays, that they don't want to save for the future, but they want to spend what they have right now?
No, I think, of course, post-COVID was a different era. I think that's why I keep 21, 22 separate. But 23 is more stable. Now it's a stable year in terms of many of disruptions. At this stage, there is also something happening on the infra side. If you see India, a lot of good infrastructure and roads have developed. Earlier, one could not imagine driving intercities. Today, our consumers are ready to go intra-cities, and for that they need a luxury car, they need a safe car also. Yeah. And therefore that's also another factor which drives the growth and the consumption on many. The YOLO thing is still to catch up at the luxury segment also, and at the end of the day, in different price points, you can start seeing like mobile phones as a category. You can see a lot of people buying high-end phones, and they are not saving, they are even buying it on an EMI because they want those high-end phones. So it's coming, but it takes time. Cultural changes doesn't happen. India is still a lot of savings are there, which is very healthy for the country. Also for I would say from a investment habits, I think it's good. But over a period of time, for sure, in the next say 5-7 years, I cannot put an horizon to it. A strong economic growth with a change in the cultural attitude to also consume luxury. There is a famous saying Coco Chanel said, "Luxury starts where necessity ends." So our products are not the core necessity. It's of course something that you want to indulge. You want to also treat yourself, reward yourself for the success. So as India becomes successful, and a lot of customers feel that need to reward themselves, and they then enter also and consume luxury as such.
That's a beautiful coining of thoughts which you've put. So correct me if I'm wrong. Mercedes-Benz India's most profitable segment is the 60 lakh to the 1 CR mark. It's between that segment, and it's been reported that the 1.25 CR segment is where you are capping in 25% of the market share. So by the end of 2023, do you expect that share to go up, or do you expect the volumes to go up? What is the change in the volume?
Let me clarify. First of all, there is no public available data model-wise, so we cannot comment on market share. So we have three segments: entry luxury, core luxury, and top-end luxury. The 25% is our share in our own sales. That if you have done 8,500 plus cars, 25% of them was in the 1.5 crore plus segment. The 60% of sales came from the 60 lakhs to 1 crore segment, and 15% of sales may have come from the entry level luxury segment. So that's our classification. For the industry, we can only assume based on whatever data is available to say that there is a lot of entry level cars sold by other OEMs, which is and the top end for them is on a different pyramid, where the top end is less but the entry level is high. So overall, I think the industry is good because there is a set of brands also catering to a lot of I would say entry level aspirations. Core luxury is there for all of us, and then on the top end, Mercedes-Benz is also able to grow that because in the H1 results, the overall sales grew by 13% year on year, but the top end grew at 54%. So that clearly shows a much more higher affinity to the top end segment as such. So moving forward, we still feel also it's our strategy to grow our consumer base in the top end segment. We are very focused, but at the same time, we are also equally focused on core and entry level because this is where we get customers to our brand also. First time consumers coming to our brand, and they come with an expectation, and we need to deliver to that expectation also when they come. So a lot of work is happening. Today's, we are launching the car in a showroom, which is also a luxury boutique. Earlier we used to park 10 cars in such a setup. Today we park 2 cars. It's more cozier, more private consultation rooms, more digital. And I think so therefore the trend is also going towards more giving experiences, even physical retail, and that hopefully I'm able to explain the structure of the market. So in that sense, that the top end 25% is Mercedes-Benz share in our total portfolio.
Okay.
Yeah.
And what part of that share is electric?
So in electric, we are only present in 2 segments. One, we have the EQS in the top end, which is 1.6 crores. And then in the core luxury, we have EQB, which is a CBU that we are doing in. Otherwise, we don't have products in entry, we don't have products in, even in core, we don't have any more products lineup. With these 2 products, still we are at 3 to 4% of our sales are electric today. Yeah. So that's a big step. And we still feel that in the next 3 to 4 years time, and we get them more products, our portfolio, we will see 25% of our sales will come from electric. So we have a strategic roadmap to go to 25%. Of course, it's based on products introduction, but not now, maybe at a later point of time at a strategic basis. But before that, we are also working a lot on charging. We are working a lot on infrastructure because we need to get all the elements in place before we also launch the products as such.
That's all I wanted to ask you. So
thanks a lot. Pleasure to catch up. Thank you very much. Thank you.
Thank you.